All right. Hello, everybody. Welcome back to another episode of the Market Close from the Parents' Basement. We are live. We got a lot to talk about. It's been one of those days once again. I know I've said that for the past 3 days, but Monday you had AMD. Tuesday you had some pretty good momentum across the market. And today it's kind of an everything rally today in terms of what we're seeing. We got a lot of headlines going on, but S&P 500. New all-time highs. New all-time highs. We hit 673.14. S&P right there is at 672.81. Wow, hold on. When did AMD get above 230? Did that just happen, or has that like happened for? I mean, I guess I just didn't see this for the past. No, it hit 230 like an hour ago. Wow, I did not see this one. 234. Congrats on AMD. There you go. That's up 10.8% on the day. I guess I missed it, but there you go. 234. That's my raw reaction to seeing that. This was at 224 when I left. 224 when I left the market open. 234. That's had a phenomenal day. Nvidia right there, 188. Tesla's up 1%. Hoodie broke 151. Right now we're at 150.70. If we can get the 150 close, that'd be amazing. AMD right there, 10%, 234. Incredible grab right there at 638. Rocket Lab and ASTS have kind of been the story of the day. Rocket Lab right there up 5%, and ASTS 81.99 up 9%. Both of those getting new deals yesterday, which has created some more momentum. But the entire market, Dell's up 8%, CoreWeave is up 8%, Nebius is up 4%. I mean, you've got market momentum across the entire board. That's getting very exciting. Figma, is that up, 12%? Figma right there, 15%, back up into the 70s. The Qs, NASDAQ, all-time high, along with the S&P 500. SoFi and Google are still down. Not sure exactly why, but they're flat on the day. And then Reddit was down below 190, below 200 today, back above 200. But overall, it's a relatively green day in the midst of the 8th day of the government shutdown, which looks like it's going to continue. We got some updates on that, but the market's doing okay. Even Amazon has finally started to break out a little bit, and there's a reason for why Amazon's breaking out that we'll talk about in a second. 225 right here. The last time it was ever close to these levels, August 18th. So it's been over 2 months since we've seen Amazon get to these levels, and is exciting to see where it's breaking out. And then you got the other parts of the market. D-Wave, that's down 4% on the day. Rigetti, that is also down 2% on the day. And then IONQ, that's down 7% on the day. These stocks really had some momentum in the beginning of the morning, and now they're taking a little bit of a breather. Again, they're up a lot for the year, up a lot for the week. So I think it's kind of normal for them to take a bit of a breather. But you had that meme stock ETF that was launched this morning, ticker symbol MEME. We'll talk more about that later. That is at 982, down about 1.85% of the day. 1 million shares have been traded on this meme stock ETF. We'll get more updates on AUM in a bit. But that was one of the things that launched this morning. And you got some of those names that are getting a little bit of red, even though, they're up a lot for the week, which is not too bad. So what's going on today? What is happening? Why are we getting this green? Why are we getting some of this momentum? And how is this all playing out? I think the number one reason, I think there's a couple of reasons, but the number one reason right here is the FOMC minutes. So even though the government is shut down, the FOMC continues to meet. Here are the core things they said. Number one, most said likely appropriate to ease policy more this year, aka more rate cuts. Now notice that says most and not all. So there were some people that said we are not restrictive enough, but the fact that the majority of them said it is likely that we're going to be appropriating to ease monetary policy means we're likely getting more cuts. Number two, there may have been more support for no cut than for a half-point cut. Downside risks to employment elevated and have risen, aka the labor market is probably weaker. And then nothing that indicated near-term urgency to change the balance sheet runoff. So at its core, I think the Fed minutes is really, this came out around 2 p.m. And 2 p.m., quite frankly, is when the market really started getting some momentum. And I think it was based on the idea, Robin right there, 151, that rate cuts are not going away. They are likely going to be intact. And any doubts that people had around the legitimacy on if we were going to get more rate cuts, like for now, Bitcoin and Ethereum, actually haven't looked at that in about an hour. ETH right there, 4,500, pretty much where we left it off in the morning. And then Bitcoin right there, 123. That's above that 121 level. So those are good. MicroStrategy was down 8% of the day. MicroStrategy now basically flat at 330. And then Bitmine has had a wonky day back and forth. Got to 61, lows of 57. Looks like it's going to close probably around that 59.50. The other big news of the day besides Rocket Lab and ASTS was BitMine is shorted by Carisdale Capital. So I went and I listened to the spaces that Carisdale Capital had around BitMine and the argument they were making. I personally, I really, I think some of you guys were in there in that space. It wasn't good. It really, really wasn't good. I mean, it was kind of weird, dude. It was kind of weird. Like the analysis that they came up with was, hey, the MNAV will compress, and because the MNAV will compress, this stock will end up trading below their NAV. And at its core, I think two things were missing with that analysis. They're using MicroStrategy as a comparison, aka MSTR's MNAV collapse from like 2.5 to 1.5. First of all, BitMine has never traded above 1.7. Right now it's at 1.4. And if it did trade above 1.7, it was like maybe for a day. So this idea that it's going to magically collapse from like all the way up here to all the way down here. I mean, if it collapses from 1.4 all the way down further, then it's going below NAV. And the idea of it going below NAV when ETH is going up is just hard to make that make sense. So I think they're making a sort of faulty comparison on where the MNAV would end up collapsing. Number two is, and I didn't know this, but they shorted MicroStrategy in March of 2024 when the stock was $140. I mean, they got obliterated on this short back in 2024, and they have the same thesis: buy Bitcoin, sell MSTR. Same thing they're saying here: buy Ethereum, sell BitMine, because they think the MNAV is going to compress. And I don't know if they're going to be right about the MNAV compressing or if it's going to be as egregious as what they think the MNAV would compress to. Not to mention the other part of their thesis is, hey, Tom Lee is not an ultimate meme lord when it comes to pumping his thesis. And I think that's actually a compliment, because that means he's actually really good at explaining the analysis without just like saying, hey, buy the stock because it's going to go up. So I don't know what argument they were trying to make, but it didn't really get BitMine to go down. I think BitMine fell to 57 today just because ETH started showing a little bit of weakness. And now as ETH is coming back, BitMine's coming back. So I don't think there was a massive macro impact from Carisdale on BitMine. But nonetheless, that is a report they came out with today. They also shorted Oklo. Wow, I did not know that. I got to go through a list of Carisdale's shorts. I knew they were not the best short firm. Like Hindenburg is way better, but Hindenburg is not around anymore. I didn't know they shorted Oklo. I mean, again, like you could have whatever you think about Oklo, but if you take a short position and the stock goes up 10, 15x, like you're screwed. So they probably have had to cover since then. Nonetheless, Oklo right there, that is also up 0.44% on the day. But that is the real reason I think the markets kind of did what they did today, which is a really nice everything rally. Gold, silver, and copper also still doing okay. Gold currently at 4,058, same thing as the morning. And then silver is that still 48? Are we at there? 48.74. The reason is for those Fed minutes. I think those Fed minutes were pretty spot on just saying, hey, rates are coming down. And if rates are coming down, then the market continues to want to allocate their cash somewhere else besides being stuck in cash. And all of this is happening, by the way. We talked about this a week ago when Goldman's study came out. No, we talked about this on Monday. Money market inflows, aka a risk-free 4% of your cash, have actually outpaced stock market inflows year to date, as per Goldman Sachs. That means the money that has come into the stock market, more money has come into safe, risk-free. I'm not going to take any risk. I'm just going to get 3.75 to 4.5% of my cash in a money market fund. And imagine what happens when rates come down and that money decides to take a little bit of a risk. If we're already hitting all-time highs before you get super, super risk on, where rates really start meaningfully coming down, which we know one way or another is going to happen in 2026. I think it could be very exciting for the equity markets. At the same time, if earnings are expanding, I mean, you got earnings expanding, rates coming down, 7.5 trillion on the sidelines. There's a lot of excitement. There's a lot of potential excitement for what could happen in the broader markets. And I think that is what's being shown today. Google right here. We do have a little bit of an update on Google. This came out like 5 minutes ago. Google wants right to bundle Gemini AI app with Maps and YouTube. Federal judge considering remedies in Google search case. So it looks like the Gemini bundle that they charge for, Google is trying to bundle more products and services into that ecosystem. And they're looking for some clarity on federal judges to figure out if they're able to do this. They still have a couple of cases going on. By the way, Google is also investing $10 billion in India. That was announced this morning for more data centers. And maybe that's the reason why Google's down. It's like slightly flat, but also Google just had a monster run over the past month. So I don't think it's that crazy. And then Amazon, the reason why Amazon is pumping today, 225 right here. And I know it's not a crazy pump, but at least it's above the 220s, which has been stuck at for a while, is apparently Amazon is raising Blackwell per hour pricing. H200 rental pricing is going up after Blackwell scale deployments are ramping up. It might be important because more it's a better gauge of how we understand the overall revenue that a company could be making and the overall pricing power that a company has on GPU licensing versus all the deals that are coming out that are showing hundreds of billions of dollars going back and forth. So I think the street's just like, okay, AWS growth, or at least AWS margins theoretically could accelerate if the AI workloads that Amazon's charging for are better. Or at least better than where they were before. Even if that shows up in Q4 instead of Q3, maybe that increases their guidance, and that could be one of the reasons that's very exciting for Amazon. Dude, AMD, this is just incredible. I really did not see AMD crossing 230 until I went live. My goodness, congratulations if you're an AMD. 235. That is an official all-time high. 228 was the previous all-time high. Hasn't been there since March of 2024. And now you're green. Now you are green. Pretty incredible. Bitfarm and Cypher, they are also moving today. Iren, is that still red? Iren right there at 6. No, look, Iren's red, but it's back to 60. Can't be too upset about that, right? Bitfarm's, CleanSpark, all those guys. Bitfarm's up 15%. CleanSpark up 5%. Cypher, these data center names continue to get some excitement. 11.5% up on the day. Quick update on the government shutdown and kind of what's going on there. This one has to do with the furlough and potential layoff of more employees.
Eamon Javers here with those details. What do we know?
Scott, we know from the IRS that they're furloughing quite a few people at that agency. A new notice just posted on the internet revealing that the IRS is going to furlough about 34,000 employees. That's roughly half of their workforce is being considered non-exempt from furlough during the course of this government shutdown. So that's a lot of people who are going to be leaving work in the federal workforce starting today. A bunch of people, about half the workforce, will be considered exempt and therefore will be continuing to operate the service. But they will be losing a lot of people, and that's indefinitely until this shutdown is resolved. Scott, back over to you.
Okay, Eamon, thanks for the update. Appreciate that, Eamon.
So the layoffs that Trump was talking about, I guess the IRS is the first agency that they want to go after. Now, there is some rumbling that the Democrats and Republicans are getting closer to a deal. S&P 500 right there back above 673, which hopefully before August or October 14th, before people have to get paid on October 15th, we do get a deal. But it might end up leading to some layoffs for IRS employees. And so that was the update in regards to government shutdowns. We got about 2 minutes until the market closes. Let me know what you guys did today. Buy, sell, trim, hold. I almost took Webull, dude. I almost at 11.91. I almost bought a couple thousand shares of this thing. And then I for lack of a better word, I pussied out. Like I had my finger on the trigger. I was ready to buy it. And then I said, no, let me wait till 11.50, and I missed out on like a $1,000 day trade. Which ironically, we were talking about day trading this morning. And so I was going to do it, and then I didn't end up doing it. But if you did take it at 11.90, I mean, it recovered a full 5% since then. So not too bad. Not too bad. 12.67 right there. That's down about 1% on the day. Again, the lockup period for insiders is done. So that's likely why there was some selling. But, at some point, it ends up getting cheap enough for buyers to come in, and it looks like that's what happened as well. Grab tried to break through 650, couldn't do it. I am happy with the performance, at least holding above 630. A couple days in a row of closing above 630, which is really good. But right now, still waiting to get a base above that 650. I see buy more BM&R, buy more Grab. Took a couple profits on some of the space names. DC8, AMD, Bitfarms, sold calls on Tesla. Yeah, Tesla's still relatively flat after the announcements they made yesterday. But overall, it's not like declining as bad as it was yesterday, right after the announcement, which is pretty decent for Tessie. All right, we got 20 seconds. 20 seconds. It looks like the S&P 500 is going to close at an all-time high along with a lot of other names. Again, it's one of those days. It is one of those days where you are seeing the markets reward a lot of patient capital that continually DCA'd into some of these names. Here we go. Wednesday, October 8th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. The one thing I do miss about being home is when I ring the bell, I don't have to worry about any neighbors like complaining about the bell. But no neighbors have complained so far at the apartment. But there's a little bit more just like tenacity of ringing the bell when you know that no one's going to complain about it. But nonetheless, there you go. All-time highs on the S&P. You get the 672.97 close. Robinhood just closes right below 151. Trying to get back to 151 after hours. 150.94. Palantir 183.50. That's green. Tessie 438. Nvidia actually got the 189 close. Couldn't break through 190, but not too bad. Grab above 635. Amazon 225. Best close for Amazon in over 2 months, which is very nice to see. Meta back to 718. Salesforce got a little bit of a bump. Even PayPal 76. I didn't see that today either. 2% move. It broke through 75, which is very, very nice to see. So PayPal getting a little bit of excitement here today. SMCI, wow, big day. SMCI 6%. That has to be Dell. Dell again raising their financial performance up 9% on the day. Is that an all-time high for Dell? This is last time Dell was here was May of 24. So it's been over a year since Dell got back to these 160 levels, and that is definitely helping SMCI. Intel right there, that's up 0.5%. GameStop was up a little bit. Square was up 2.64%. Rocket Lab, did we get 64? We got a 65 close on Rocket Lab. $65 close on Rocket Lab. ASTS, I think, got 83. ASTS got 81. Above 80 on ASTS and above 65 on Rocket Lab, I think is very, very bullish. Hard to say that it's not that bullish. Nancy and Kathy, got to give them their credit. Tempest AI. I don't know why this one hit 11% on the day. They both bought this stock when it was at $20. This one should have followed Nancy. Should have. I didn't, unfortunately. But she bought call options. She didn't even just buy stock. She bought call options on this thing when it was $25. 103. This is one of the like major, I guess, healthcare AI plays that's out there. Market cap of this bad boy is $17.9 billion. Kathy and Nancy loaded up big on this one, up 11.3% on the day. SoFi did get the $28 close, although it was down on the day. And then Google still did get a 240 close, which is not too bad. Reddit as well was down. So Reddit, SoFi, Google were red, but still not as red as they were a couple of days ago. AppLovin as well. I mean, down a couple bucks, not that big of a deal. This thing was at 550 2 nights ago. Now it's at 629. So this one recovering a lot of its momentum as well. Chell said I did follow Nancy. Dude, that one was, I followed her into Google and Amazon. And on Amazon, quite frankly, she hasn't done the best. But Google, she killed it. But it's also Google and Amazon. Tempest was like the odd one out. That, you know, when a politician as good as Nancy goes long on a stock that like is not as well known as Google and Amazon, it's worth paying attention to, right? Because it's like they probably know something about that name for them to be that specific in it. And it looks like that one has worked out for her. Oh, wow. The actual stats is Nancy's up 1.1 million in the stock market today. Oh, take a look at that. 1.1 million in the stock market today. The next best one is Rick Scott from Florida, up 500 grand. Then you have a representative from California up 190 grand. It's pretty incredible. Pretty incredible. And overall, not a bad day. Robinhood right there, 151 after hours. AMD 235. I don't know what happened at about, what is this, 2:30 Eastern, 2:45 Eastern. I mean, that's a massive move. I don't know if an announcement came out or something. I don't see any. I think I would have got the headline. It seems like, I guess it was just technical, waiting for a delayed reaction after that OpenAI deal. There is a lot of option flow. Take a look at this. You got a decent amount of Jan 2026 180 to 270 call buyers. So some of that in the money, some of that deeply out of the money. And I guess the options inflow definitely was helping here today. Let's take a look at the overall stocks that were traded in the options market. Top 20. Wow. AMD 2.4 million. Number one ahead of Nvidia and Tesla. 1.5 million calls, 887,000 puts. So you did have a decent amount of people trading AMD today. AMD, Nvidia, Tesla, Amazon, Webull, number 5. Yeah, dude, Webull 1190. My gut told me to buy it. My gut told me 6% down after a 10% down day the day before was like enough pain. I did not take the trade, but Webull right there, number 5. Then you have iBit, Opendoor, Intel, Poet. By the way, why was Opendoor down today? Today was a massively green day. Where did Opendoor end? Opendoor, yeah, 7%. Why did Opendoor go down? Not sure why, but Opendoor took a hit. Then you have Intel, Poet, Rocket, Apple, MicroStrategy. Poet got up there. A lot of people have been talking about that one. Oracle, SMCI, SoFi, Archer, Iren, Rigetti, Palantir, and Meta. Hood didn't even make the top 20, or SoFi. No, SoFi did. Yeah, SoFi was like number 18. So those were kind of the main names that were traded today. Is there any ARM news? Let me see. Is there any ARM news? Was that stock up today? ARM, I think there actually was. ARM was up 5.4%. There was a bunch of different semiconductor names that took off after Jensen spoke, so you could have had some announcements across the board. 2.6 million in the 180 October 31st call was bought today on ARM. I don't see anything fundamental, but the option flow definitely looks pretty bullish on some OTMs. Not too bad. Not too bad. Seal says, hey, Amit, I hit 6 figures today. I want to thank you in this community. Seal, congratulations. It's been a strong day, strong week for a lot of people. I mean, I know we usually do these on Fridays, but we might as well do it in the middle of the week because Rocket Lab, ASTS, AMD has probably helped a lot of people. Let's do it. Year to dates. What do we got? Year to dates. What do we have? What do we got on our year to dates? Yeah, I don't know why Next was down 5% today or 10%. This one took a little bit of a hit as well. Yep, IRS to furlough 46% of staff. We talked about that as well. You did have that as one of the main headlines on the government shutdown. In terms of the stock market draft, I caught up a little bit. I'm at 44. Matt's at 47.8. Tanner's at 25. Steve's at 10. Chris is at 14. By the way, UNH, shout out to Chris. He took a lot of shit for UNH for the past couple months. UNH right there, 370. For those that followed him into this one, especially if you got in below the 270s, which I think that's when a lot of people started bottom fishing on it. You're doing very well. You're doing very, very well. So shout out to anyone inside of UNH. Is that one's doing good. S&P 500 right there, 0.6. Robinhood 150.88, and then Palantir 183.51. All right, my year to date is 207.54%. 207.5. I think last time I told you guys it was around 180. Hood and Grab helped over the past week. Nvidia came back. That helped a lot. And then BM&R has been helping as well. So last year we did 275%. I don't know if we end up doing another 200% year, but we're at 207 for this year on the year to date. And I think AMD, Rocket Lab also helped. Rocket Lab also helped today. That has been helping a decent amount of people. Davis right there up 250. Tony's up 80. Marcus up 73. Michael's up 69. Vincent's up 50. Kurt's up 189. Lucas 35. Matt at 61. Agam at 126. Steven Johnson at 36. KMS at 75. Allen at 86. W. Porter at 13. CC at 85. I'm seeing pretty much at least above 40 across the board. Ninth Dimension, 106. Louis Cruz at 103. Michael at 116. Jonathan at 91. Allen at 229. Irene at 174. Fred at 112. Sam, our boy Sam Rubric. I think this one had a good day, right? He gave us the thesis last Friday. There you go. Wow, Rubric, 5%. All right, so Sam should be loving that. Sam's right there is up 80% on the day. Merkin said I'm up 58%, 13% this week. It's incredible. Angel, 125% with 180,000 realized. Congrats, Angel. That's incredible. 180,000 off profits this year. Absolutely amazing. Matthew's at 119. June's at 72. Marco's at 52. I mean, I know these numbers are pretty wild, but like, I think a lot of people can understand that if you're heavy in an ASTS or a Rocket Lab or even a UNH, like, yeah, I mean, these numbers, they happen. It's kind of just math as the names get higher, especially if you have any leverage attached with them. I talked to someone this morning who not only has 7,000 shares of Rocket Lab, he has like 2,000 shares of some 2X Rocket Lab fund. And then he has call options on Rocket Lab for December. And I was just like, goodness gracious, bro. Like, I mean, imagine a day like that for not only his portfolio today, but his year-to-date performance when a Rocket Lab goes up 30% this week like it's been up. I mean, it's pretty incredible for what it can do for a lot of people. And it is obviously very, very exciting. Ebram's right there up 67. Adams up 73. Ken at 115. G at 45. Melvin at 85. Brandon at 113. I mean, look, as Ash right there, Ash has been crushing it on freaking Iran. This one has, literally changed people's lives this year. If you are beating the S&P, I think that is the benchmark that every retail investor has to hold them to. And the S&P is up. Have we crossed 15%? Year to date, 15%. So beating the S&P, that's what matters. I mean, I'm not up 8,000% or something like that, but as long as we're beating the S&P, because if you're not beating the S&P, you might as well buy the S&P. If you're beating the S&P, the basket of names that you've chosen or the strategies you are deploying are probably better than buying the index. And it seems like pretty much everyone here is beating the S&P, and a decent amount of people are really beating the S&P. So incredible stuff. Congratulations to everybody. Big day. Now I think we just want to keep it, right? We just want to keep it. Not that interested in taking crazy risks to end out the year. We just want to keep it. Wow, AMD's not stopping. Dude, you think there's some news? I think there might be some news. 2:37 after hours. Feels like there's something else going on besides just the call option volume. Maybe it's more. Maybe it's more than that. We'll see if we can get anything. I mean, Jensen did pump up the whole semiconductor industry today when he went live, and we covered that interview, and he kind of commented on the creative financing of all these. He threw a little shade at AMD, to be fair. He definitely said, can't believe they gave up 10% of their company. He was definitely surprised at that. But no, nonetheless, I guess the entire market kind of enjoyed the broader thesis that I think, you know, what the market was happy about today with Jensen. Like, there was so much. Let me show you guys this picture. There was so much creative financing going around over the past couple of days with Oracle, AMD, Nvidia, etc. So I think a lot of people are just kind of like, hey, is this real? Is this 1999? Like, what's going on right now? And this picture right here kind of highlights by Bloomberg how crazy things are. As you can see right here, I mean, you have every single major company, Nebius, CoreWeave, Intel, Oracle, xAI, Figure, AMD, OpenAI, NVIDIA, Microsoft, all intertwined and interwoven with each other. I'll put this picture in the chat for those that want to read through the entire thing. And I think Jensen today basically just said, hey, like, there's going to be massive ROI, massive profits. And as a result, it's not something to stress about, because in the early innings, yeah, you need some creative financing, but eventually if the ROI is there, because AI will change every aspect of our lives and it will be an industrial build out, then you have to look at that long-term vision. And you either believe him or you don't. If you don't believe him, you get the hell out of the market, because this market is propped up on AI. If you do believe him and you think there is potential of AI, then at its core, all of this financing eventually will pay off. And I think that's what's also helping the broader market. Yeah, AMD got a bunch of price targets. That's true. 150 to 210 from Goldman Sachs. There was a ton of price targets yesterday. But it feels like, dude, another 10% day, 12% day. Feels like there's something else. Maybe it's just a little bit of a delayed reaction from the OpenAI stuff. Because I mean, most people thought this was happening yesterday. Most people thought it would bust through all-time highs yesterday. And then it kind of just faded out into the 200s. But now it is going higher. What is the short float on AMD? Let me see. I'm going to guess it's less than 5%. 2.59. Okay, so not a massive float. Not a massive short float, but just below that 3% level. All right, so that is what we got. Let's get into some other headlines, and then we will keep going from there. Again, congratulations to everybody. Pretty incredible, but some amazing results we've seen over the past couple of days. Also, Hoodie. I mean, I didn't expect Hoodie to break through 151 today, but that kind of happened all at once. And so that was also very exciting to see. Amazon right there, 225. SoFi and Google slightly down on the day. A lot of these other names made some all-time highs, including Rocket Lab right there at 65. Even CrowdStrike broke above 509. I mean, it's been a while since it broke above 500. The VIX was down another 5% on the day. Really good for the equity markets. And then you have the S&P again making all-time highs. All right, so let's get into some of the other headlines. Let's start with Sam Altman. He did a new podcast, couple of takes from what Sam Altman is saying around the state of AI, where it's going, and kind of how bullish he is long-term around what's happening. So let's pull this up, and then we'll keep going from there. We'll keep an eye on AMD after hours as well and see what's happening.
We have decided that it is time to go make a very aggressive infrastructure bet. And we're like, I've never been more confident in the research roadmap in front of us, and also the economic value that will come from using those models. But to make the bet at this scale, we kind of need the whole industry or a big chunk of the industry to support it. And this is like, you know, from the level of like electrons to model distribution and all the stuff in between, which is a lot. And so we're going to partner with a lot of people. You should expect like much more from us in the coming months.
Actually, expand on that, because when you talk about the scale, it does feel like in your mind the limit on it is unlimited.
If we are right that the model capability is going to go where we think it's going to go, then the economic value that sits there can go very, very far. We can see how much demand there is we can't serve with today's model, but we would not be going this aggressive if all we had was today's model.
Right.
Okay, I know he sounds a little bit like AI, but at its core, what he's saying is, hey, if the model is getting as good as we think it can get, then we are not going to lose. There is going to be a lot of value that's created, and as a result of that value, a lot of money that's created. And long term, that's going to be very important. The next clip right here is where he talks about Sora, which I got an invite code to, by the way. It's a pretty cool app. I mean, the AI is quite incredible. I'll show you guys some videos after this, but the amount of compute that's needed to make Sora work and kind of what it means for the industrial build out as well.
Sora videos are expensive to make. Right. So that will require a very different, for people that are doing that like hundreds of times a day, it's going to require a very different monetization method and the kinds of things we were thinking about. I think it's very cool that the thesis of Sora, which is people actually want to create a lot of content, it's like 1% of users create content, 10% leave comments, and 100% view. Maybe a lot more want to create content, but it's just been harder to do. And I think that's a very cool change, but it does mean that we got to figure out a very different monetization model for this than we were thinking about if people want to create that much. I assume it's like some version of you have to charge people per generation.
What's your thinking on ads for the long tail?
Open to it. Like many other people, I find ads somewhat distasteful, but not a non-starter. And there's some ads that I like. Like one thing I'd give Meta a lot of credit for is Instagram ads are like a net value add to me. I like Instagram ads. It's like, I didn't know I want this thing. It's very cool. I'd never heard of it. I never would have thought to search for it. I want the thing. So that's like, there's kinds of things like that, but people have a very high trust relationship with ChatGPT, even if it screws up, even if it hallucinates, even if it gets it wrong. People feel like it is trying to help them and that it's trying to do the right thing. And if we broke that trust, it's like you say, what coffee machine should I buy? And we recommended one and it was not the best thing we could do, but the one we were getting paid for, that trust would vanish. So like that kind of ad does not work.
Now, so he's talking about the monetization models. By the way, AMD and the S&P is still going after hours. AMD right here, 237.30. He's talking about the monetization of Sora, which is going to be very important because at the end of the day, this is like a really big question. How the hell do they make money? And all of us are kind of assuming, including Jensen and Lisa Su, that OpenAI is just going to figure it out. There's $4.5 trillion worth of interwoven spend and equity based on that picture that I shared that's tied to OpenAI directly. So they've got to make money. They've got to make money somehow, and it's got to be profitable. I don't think Sam Altman's necessarily telling the truth right here. He's trying to sound like he kind of likes ads, kind of doesn't like ads. He needs ads. He really needs ads because the majority of the world is not going to pay, forget $20 a month, even $5 a month for some type of ChatGPT that they can just use Gemini for free instead of using OpenAI. So they're going to need ads. We've already seen leaked documents of how much they're working with ads. In fact, they hired the former head of advertising at a major Fortune 500 company to begin working on ads inside of OpenAI. And the ads are likely going to be pretty good because they're probably going to have a lot more data on you than traditional advertisers. Now, Google has always had the best data along with Meta, but with GPT, you have such a intense and intimate relationship in terms of the questions that you're asking that the advertisements theoretically should be better. So I guess one way that that they're probably going to monetize is with advertising. The question is going to be how good will that advertising be? How effective will it be? And ultimately, will that be something that they can use for a profit? Sora is just another TikTok. That's all people are going to use it for. Yeah, I mean, look, right now, I got invited to it the other day. Let me show you guys. It's just AI generated videos instead of user generated videos. So let me pull this up. Okay, so I'm not going to play the audio, but it's just random AI stuff, as you can see right there, as you scroll through it. Historical figures. It's just like this Ring video filter is really something that people play with a lot. You can use Sam Altman to type in a prompt. I mean, I know it's kind of weird on first hand. I haven't used it too much. There's Bob Ross right there, apparently painting a haircut on somebody. Yeah, slop. I would call this slop. There's Jake Paul. That's not real Jake Paul. That's an AI Jake Paul. It's just a lot of random stuff right here. Long term, I don't know how successful it's going to be, but the point is it's very expensive to make all this compute to make all these videos from a computational perspective, right? The amount of GPUs that are required to make these videos. And, you know, whether or not I like it or not, or you like it or not, the app's growing like crazy. It's #1 on the App Store. It is beating ChatGPT, beating Gemini. And maybe this is one of the ways they're going to make money. TikTok is one of the most profitable social media companies on the planet. And if this actually does have a chance of dethroning TikTok or shifting people's attention, even if it's not a moneymaker from an advertising perspective, if they have your attention on that platform, there's a bunch of different things they can do to navigate it. In fact, I mean, like, look, if brands want to start using the platform for advertising their products without like paying for ads, but rather using it as a mechanism to sell things, and OpenAI gets a commission of them selling products via some AI video that pops up. Like, there's a lot of different verticals this can go down. I think that's why Google's trying so hard with Nano Banana, because they know that AI creation is going to be very important long term. The point is they got to make money. And the question is how they're going to make money. But I think that is a very, very important question to try to answer. So that's what we have in the context of OpenAI and what Sam Altman said. We have to entertain the robots somehow to distract them from taking over. Exactly. The only way to entertain the robots is to use something they can understand, like AI slop, to keep them from killing us all. But regardless, the point of making money is the point that Altman is making. And that's something that we have to understand. Now, here's Lisa Su. She was on Fox Business today with Greg Brockman, the, what's his name, OpenAI president. And here's some more of what they had to say about the deal. Maybe this is also what helped AMD get some love right here. 237.50, still moving after hours as it continues to go green. And then we'll talk more about BM&R.
To satisfy all that our deal with OpenAI covers, as well as our broad set of other customers.
Okay, so let me just ask about this particular deal, because what it does is it grants an enormous number, 160 million stock warrants to OpenAI. This is, quote, performance-based, but it's not your performance. They've got to perform, meaning the first tranche doesn't kick in until that first gigawatt of compute power is purchased. So they need to deploy that, but these are at 1 penny a piece. I find this really interesting. So what are you getting? Is this just a way of discounting the price of the chip, or is there some broader strategic relationship contemplated that has something separate to do from the chip purchases? I mean, they could end up having a 10% stake in Advanced Micro Devices, and what does that actually mean?
Yeah, so Liz, I think this is a great question, and let me just take a step back and just give you a flavor of where we are in the AI, compute landscape right now. I mean, this is about sort of massive accelerating build-outs, and you need a lot of capabilities. The entire ecosystem has to come together. So this is about how do we get more AI compute online faster. And when we thought about this deal, what we thought about is, how can we ensure that both companies, AMD and OpenAI, are committed to working together over multiple years? And that's what this deal is all about. So think about it as a win-win-win, right? From an AMD standpoint, it is accretive from day one. The first revenue we ship is good for AMD shareholders. We get significant double-digit billions revenue for every gigawatt that OpenAI deploys.
Yep.
On top of that, we work really closely together on the software and the hardware and the networking ecosystem, which is very helpful for all of our ecosystem. And then as we ramp deployments, OpenAI gets the benefit of some of the value creation. So it's like win-win-win.
Well, guess who's here? Greg Brockman. Greg, good to have you here. He is the president.
Now, again, Jensen thinks that giving up 10% of your company for that value creation means you have no leverage. But nonetheless, Lisa Su obviously sees it a little bit differently. And look, it's helped the stock. By the way, Costco's moving after hours. Did Steve finally buy in? Costco usually is not up 2%. I'll see if there's any news on Costco. But, I think if AMD doesn't do this deal, this stock does not go from 150 to 230, obviously. So there's got to be something that they recognized it was okay to give up leverage for, and it ended up helping the stock and the value of the company long term, it seems like.
And co-founder of OpenAI. Greg, this is a 5-year deal. Yay, I know. This is a 5-year deal. What do you envision AI can do 5 years from now? And what message does OpenAI's massive purchase of AMD processors really send to the world about what you believe this technology can help you accomplish?
Well, first of all, it's very good to be here. And we always, within OpenAI, make the joke that AGI will come before video conferencing. I think that
Yeah.
it's a joke, but it actually has truth to it, right? That I think that there are problems that are outside of humanity's ability to conquer on our own, and that what we want from AI is not just productivity increases for everyone, but we really want to be able to help solve problems that, develop new technologies, solve diseases, be able to educate everyone in ways that would not be possible without amazing new tools. And so what we really see coming is we see a world where the whole economy is really powered by AI, that the growth of the economy is fundamentally linked to the ability to use AI, and that the limit on that is going to be computational power. And that's why we need to partner with the ecosystem. We need to partner with AMD and other companies to just increase the amount of compute in the supply chain so that the world will have enough AI to meet all of the demand that we see coming.
But let me
So again, pretty much the same argument they made over the past couple of days. We need more compute, and Lisa Su's saying that it's important for AMD to participate in being able to help them get that compute. By the way, Costco September sales are out 8% year over year, 26.5 billion. Comp sales 5.1%, Canada 6.3%, international 8.5%, digital sales 26.1%. I guess this is the one. Digital sales, this one above. I think last month that was like 21%. So that might be some 5%. We are getting into holiday season, which is going to be important for all the retailers. And it looks like that's the best one that is going on. This is up 2% year over year from a couple of different metrics. So there you go. Costco, 26.5 billion. This one doesn't move that often. It's actually up 3% after hours. Look at that. There you go. 910 to 938. Costco actually making a bit of a move. I thought it was because Steve bought in. That's a much easier way to define it. But there you go. Costco getting some love after hours. Sandeep, thank you for the super chat. Hey, Amit, I have a Jan 26 hood call option up 400%. Should I sell or keep it? I also have shares for the long term. I think you won, bro. You're up 4x. I think you won. Depending on the strike. I mean, if it's deep in the money, then if it's like $100, $110, I feel like you keep it. If it's at that 135, 140, maybe you don't take the risk. If you're up 400%, I feel like you take the win. This is part of this is the time of the year where you probably start taking some wins, and this is to everybody, taking some chips off the table especially if it's like rooted in leverage. And I think that's okay, especially if you have shares for the long term. So you got a 4x, that's a winner. I would definitely at least take your initial off the table and then maybe hold it until the end of December. Now the trick here is like, look, could you accelerate your gains if Robinhood has a massive end of year, if Bitcoin has a massive end of year, S&P gets 7,000? Yes. And then you might really feel bad because you feel, you missed out on some more momentum. S&P still moving after hours, 67,350. But it's also a question of like, what if it doesn't? So I think highlighting that risk to reward to yourself is very, very, very important. Path, was that moving up today? Yeah, I know a lot of people that are in SoFi. You got those $10, $15 calls. If SoFi is still able to make a move by end of year, maybe you keep them because they're so deep in the money. Same thing on Hood. If you got 100, 110, I think maybe keep them if it's able to make a bigger move. But if you're closer to the money, then maybe take some profits. Like if you have SoFi, $25 calls, for example. UiPath, that was up 6%. That was up a lot over the past week, if I'm not wrong. Path stock year to date, or over the past, 20% over the past 5 days. This one's been dead for the past couple of years, but looks like earnings got that one to get some momentum, which is not too bad. Yeah, also, if you need to, for tax reasons, long-term gains versus short-term gains, that's also very important, right? What is long-term, what is short-term? I think this is the part of the year where people start doing tax planning as well and try to figure out how much exactly do they really think they're going to have to estimate to pay. And a bunch of those short-term, long-term implications are going to come up. All right, a couple more macro charts, and then we'll get into some other stuff. So take a look at this. AI data centers could lift U.S. natural gas demand by up to 14%, which is just it's just crazy to imagine that could happen by 2030, given how much gas we already use in the United States. That could increase by 14% by 2030. Bloomberg Intelligence projects that would be a 14% move in the next 4 years from 2026 to 2030, which obviously means you're going to have higher energy prices if you don't have the ability to supply that demand, because if you have a lot of demand and not that much supply of natural gas, you're going to have higher prices, right? There's no way around it. So you're going to need another way to be able to deal with those prices. So again, the same argument around, hey, energy is a big sector. It's going to need to be a big sector that wins long term is important. And it doesn't look like that argument is slowing down at all. Now, here's another thing that came out from Apollo, which is a private equity firm. There are 3 reasons why job growth is so slow, even when GDP is strong. And the 3 reasons they come out with is lower immigration, AI implementation, and normalization of job growth in the public sector. I think these 3 are legitimate reasons for the weakness we've seen in the labor market. And I think these 3 reasons are also something the Fed is paying a lot of attention to. You have much less lower immigration. In fact, you have way higher deportations. So you're naturally going to have less people having jobs. Number 2 is AI, obviously commoditizing a lot of jobs that are traditionally even white-collar jobs and potentially blue-collar jobs as we get into the robotics era. And then 3, you have a normalization of job growth in the public sector, aka Trump saying we don't want to have such a big bloated government and we're not going to be hiring as much before. I think 154,000 people took the buyout offer that Doge offered back in February. So you did have a decent amount of people that took that buyout offer. And if you're not hiring as much, then you're likely not going to get that much job growth either. APLD is tomorrow. APLD is tomorrow. Unfortunately, I will not be live tomorrow again. I'm getting a root canal in the morning. Probably won't be able to talk in the evening. But APLD, Pepsi, Delta, Tilray, and Levi's are tomorrow. So tomorrow officially starts earnings season. And those are going to be the first 5 companies. Now, next week is when you get a lot more companies that are going to start popping up. But those are going to be the first 5 tomorrow that we've got. Next week, you've got all the banks. So Tuesday, JP Morgan, J&J, Goldman Sachs, BlackRock, Citi, Domino's. Then you have ASML on the 15th. Then you have Schwab, TSM on the 16th. So next week's going to be the real first big week of earnings. But yeah, as of now, no earnings for today. Robin right there, 151. After hours. Grab, did they put out the earnings? I don't know. I think it's going to be in early November. We know Hood's on November 5th. And we know SoFi is, when is SoFi? SoFi is October 28th. We don't have Palantir's earnings date yet either. So we're going to see what happens from there. Do a live stream of the root canal. Dude, if I could, I would. Like, if I legit could, I would. But it might not be easy to do that. But I would if I could. In terms of the audio spaces we did today, so for those that joined, I hope you guys enjoyed it. I think it was fun. It was 30 minutes, and hopefully it was just filled with like, you know, pure analysis, no mumbo jumbo, and I think it was good stuff. So 2 companies we covered that I don't want to fully get super deep into today. If you really want to listen to it, it's 30 minutes. I'm going to put it right here in the chat, and I would recommend listening to it. But one of them I am definitely getting closer to hitting the buy button on, which is Amcor. So not going to get super deep into it today, but at its core, this is a company that is going to be really important in the semiconductor industry inside of the United States. So it's not just the semiconductor name that's in Taiwan or Japan or all across the world, but the onshoring of semiconductor manufacturing in the United States. Everyone knows TSM has that Arizona fab, and Apple has promised to invest a lot more money, build a lot more stuff in the United States. Amcor is a company that does $6 billion in revenue, market cap's at $7.5 billion, trading at 1.5 times sales. Looks relatively cheap compared to the future prospects of their growth. Stock has had a bit of a run. I mean, year to date, this thing is up, 17%. So it's not like some explosive 50, 70% move yet. I might be taking a position in this one. So when I do take a position, I'll kind of explain the broader thesis. A lot of these names are not going to be massive positions in the portfolio. Quite frankly, they'll just be swing trades, but 40-50 is the target here off the idea of continued onshoring in the United States via the semiconductor ecosystem. One quick thing I'm going to say about this, and then we'll talk more about it when I actually do make a position, is if you take a look at their latest press release, and I found this out today, and it was quite incredible to see. I mean, you don't see this stuff often. It was one of those things that was just like, wow. The people that they had commenting on this press release that gave them a quote, Howard Lutnick, Secretary of Commerce, COO of Apple, Sahib Khan, Jensen Huang, CEO and founder of NVIDIA. How many times does Jensen mention a SMID cap in their press release? And then the VP of Advanced Packaging Technology and Service at TSMC. Amcor is a packaging technology in the semiconductor space. I mean, just reading some of the people that are talking about this company as a important company for American manufacturing of semiconductors was very, very interesting. Along with the fact that, I mean, at 1.5 times sales, it's not one of the most expensive semiconductor names that are out there. So Amkor is a name I think people should look at. And if you want the full due diligence, you can listen to the 30 minutes we had on Twitter Spaces today. Micron, also a big day, 5.9%. I mean, all the semis really got to move. Broadcom as well, another 2.5%. That got some momentum. Duolingo, did that move today? I didn't take a look at Duolingo. Wow, Duo. Oh, that's why I got close to Matt. I was wondering why I got close to Matt. I guess it was the dual. We're only down 27%, folks. We are 27% closer to breaking even. Dude, at one point we were down, I think, more than 50% on Duolingo. It was so bad. So there you go. Dual's helping us right there. Matt's still at 47 on Rock Lab and ASTS. But that one is helping us out. So not too bad. Palantir came out. Did it already come out? November 3rd. Sometimes the brokerages have it, but they don't until the company says it. You don't know. Yeah, the company didn't announce it yet. Brokerages are just guessing right now until they announce it. We're not fully gonna know. Okay, so what else we got? What else we have? We got a couple other headlines that we'll take a look at. And then we'll keep going from there. I don't know why Next was dumping today. Again, they are not really a major player in oil and gas yet. That's VG for those that want to get actual revenues, but this one was down 9%. VG was actually up 2%. So it looks like there must have been something headline specific for Next for why it was taking a bit of a hit. Okay, cool. So let's pull this up right here and let's move over to, CFO. Oh, yeah. I forgot the CFO left. Yeah. You guys mentioned that in the morning. That's correct. Yeah, that's probably why, which is not that big of a deal, but it is what it is. SMCI, again, Jason and Chris both liked this one, and they gave the thesis a week ago. I'm not in SMCI, but yeah, I Amkor kind of reminds me of SMCI when it was at, $10, $12, because liquid cooling technology for GPUs and server racks is necessary. Like there are certain components of the supply chain ecosystem for semiconductors that you just have to have. And SMCI was one of those. Now SMCI has a bunch of competitors, which is why their margins suck. But the point is, these companies are going to grow. And if NVIDIA is going to grow, if AMD is going to grow, well, SMCI is probably going to grow along with Dell. And Dell increasing their revenue projections was just golden for SMCI to piggyback off of. So a lot of those semi names got that momentum today. And that's what also helped them. Why did you pick Visa? I picked Visa because I thought it would be a bit stable for the portfolio. I didn't realize the stablecoin narrative, ironically, was going to be a little negative for them. But I mean, at one point it was down 10%. Now it's almost back to break even because I think stablecoins are, actually going to help Visa more than hurt them. So it shouldn't be that horrible for it. All right, let's listen to Dan Niles. I think 1 week he's bearish, the next week he's bullish. He's not been that consistent, in my opinion. Remember, I think the most consistent thing we can get from Dan Niles is that he said there will be an end-of-year crash after an end-of-year rally. So maybe he sticks to that because of his argument that holiday demand would be really bad, and that would cause like a pseudo retail recession. But let's get his thesis today on what he thinks is going on with a lot of these AI stocks.
You're going to get another probably 3 cuts between now and January. And then you're probably going to get Stephen Myron being the new head of the Federal Reserve in May. And he wants rates about 1.5% lower than everybody else. So in an environment of easy money, you're going to be able to fund a lot of cash burning businesses and have everybody be treated like everyone's going to win. So from a stock perspective, that's how I'm thinking about it. Now, if you want to look out several years from now, or maybe at the end of 2026 when rate cuts are done, and you go, all right, are people going to get more discerning about these circular investments? And are you going to figure out, well, which AI companies are actually going to win versus the ones that are going to be sort of left behind? Then I think you're going to start to see some problems. But in the near term, I think these stocks go up for one simple reason. Easy money funds a lot of cash burning AI businesses.
I just got to take a little divergence here because you just mentioned Steve Myron as the possible next Fed chair. Why do you think that? I think just today he batted down rumors that he was even considering it or in conversations about it.
Well, I mean, let me put it this way. There's a reason he's out. If you look at the Fed dot plots, he wanted 125 more basis points of cuts between now and the end of the year. So that would mean one cut of 75, one cut of 50. President Trump, as we all know, gets to appoint the new Fed chair. And as last I saw, Myron was still part of the White House administration while he's on the Fed at the same time, which has not happened in a very long time, right? Usually you resign your prior post. So we'll see how this works out. But I think it's pretty clear that the Fed, much like in 2021, where I thought they should have been raising rates, they convinced themselves inflation was transitory. They kept rates on hold, and the S&P finished the year up 27%. And so I think right now, the Fed wants to cut regardless of what inflation being above target for 4 years. And the White House wants rates down. Whoever gets appointed, let's say it's not Myron, it's somebody else. It's going to be somebody that wants to really cut rates a lot. So easy money drives everything up. And that includes stocks, Bitcoin, gold, wine, art, you name it, just like it did in 2021. And that's what's going to happen again. And in that environment, every company is treated like a winner because every company can get capital.
Okay, so the question is, which look, he's not necessarily wrong about the idea of cheap capital funding the excitement for risk on assets. The question is, does it turn into freaking 2021? And that I don't know. Guys, are you really buying Amcor after hours? Goodness freaking gracious, dude. Are you guys really? Is that green candle really? You guys buying this thing? I didn't even take a position yet. Goodness gracious, bro. I've barely done my due diligence. I learned about it today and I said I like it. It's kind of interesting. Guys are some degens, bro. Holy crap, dude. My goodness. You guys are wild. I didn't even buy this shit yet. You guys are getting better prices than me. Goodness gracious, bro. No, I really do think it's like market cap compared to its sales. It's one of the cheapest semiconductor names that's out there. Like you're really not paying a heavy multiple. Now, granted, it's a small cap. Stuff could happen. So there might be some dilution. Like there's a lot of different parts of the thesis. So I wouldn't just go YOLO into it because we're mentioning it, even though I know that's inevitable. But at its core, if you believe in American manufacturing in the semiconductor ecosystem, then this is one play that is out there. There's another one we talked about today, P-Lab. But Amcor is the one that I thought actually had some broader excitement. But you guys are freaking degens, bro. All right, so that was the analysis on Dan Niles. Now, what he did mention around the cheap money stuff. Look, that coincides with the Roundhill meme stock ETF thing that came out today. So I didn't know that Roundhill, the company that came out with that meme stock ETF, they did this back in 2021, which kind of coincides with the argument of like, hey, are we getting a little frothy? So let's take a look at this real quick. But this happened before. It's not something new. It's just last time it happened, it wasn't really the best thing when it played out.
One of the street's top technicians among them. He's Jonathan Krinsky, BTIG. He joins us now. You put out a note today, quote, "The memes are back in town. New ETF launch has shades of late 21. Tell us more."
Yeah, hey, Scott. So, 21 was the initial meme frenzy with GameStop and AMC in early 2021. But it wasn't until December 8th, 2021, when it actually got around to launching a meme ETF where you could...
December 8th, 2021, the meme ETF came out. 2022, we had a bear market. And then 2023, it went away. Because I guess they thought that it was too bearish for a meme stock ETF. The fact that the meme stock ETF is back doesn't have to be a top, but the point is historically, 4 years ago, that's kind of what it coincided with back then.
Invest in the so-called meme stocks in an ETF form. So at that point, that's right about when the NASDAQ itself was topping before its bear market. Then fast forward to November of 2023, the meme index at that point was down about 80% from when the ETF launched, and the ETF actually closed. And so I think the performance kind of spoke for itself. And since then, the meme index has come roaring back up about 100%. And today, actually, the meme ETF launched again, started trading. So it's a different number of stocks, different type of stocks, a lot of quantum computing. But the sentiment is still there, and oftentimes these ETF launches and closures can kind of mark turning points and kind of give you a good gauge of sentiment.
Do you want to, speaking of, weigh in on the idea of froth and excess in the market and what certain charts may be telling you?
Yeah, I mean, so it's more of the same, really. We have this dispersion, massive dispersion under the surface, where a lot of the meme and retail favorite stocks and AI stocks have been doing quite well. Some of them are probably a bit extended for our liking. And then on the other side of the coin, you have a lot of the real economy. I mean, take a look at the restaurant index, which is hitting almost as low as it was in April. And then you have to really look at some relative performance. You can't always tell an absolute performance, but look at the relative performance of the airlines, hotels, home builders. You go down the list of a lot of the consumer-facing parts of the market, and then not to mention some of the credit-sensitive parts of the market, like.
So that is the question for everybody. I'm going to put the poll in the chat. And by the way, this is the list for those that haven't fully seen the list. These are all the meme stocks, quote unquote meme stocks, that are in this this ticker symbol MEME ETF. The question is very simple. Does a meme stock ETF signal a top? Look, we've had multiple, like literally multiple situations over the past, I would say almost 2.5 months. Remember, like a month ago, Kanye West launched the meme coin. Like I think I've shown many examples of things that are objectively toppy, and it has not led to a top so far. And I think it's because, again, the bears can try to make the argument as much as they want, because on paper it sounds like if you were writing a story about how the market tops, all the things that have been happening over the past couple of months would be included in that story. The problem is, very simply, earnings growth on the most important companies on the planet is not really allowing the market to top, because money has to go somewhere, aka rates coming down. And if earnings are going up, then money is probably going into the best companies in the world, the companies that we know will be here for a very long time: NVIDIA, Amazon, Google, Tesla, etc. And so, look, Rocket Lab at 65, is that frothy? I mean, yeah. Robinhood at 150, is that frothy? Yeah. Like, I'm not going to sit here and say Robinhood at 150 is not frothy. But the point is, does that mean it deserves to go all the way back down to 100? Does Rocket Lab deserve to go all the way back down to 30? I don't think it has to. And if earnings are any would decent on those companies, if not exceptional, which I think, Robinhood can definitely put up some great earnings, so can Rocket Lab, then that would be a tailwind for all those stocks, even in the midst of the froth that could exist on a lot of these companies that are out there. And again, if some of these companies that are seen as meme stocks go to zero, it doesn't affect the market at all. And that means the 50 companies that matter probably get an even bigger premium if money leaves the, Oak Gloves of the world, which, doesn't necessarily have to be meme stock if they get a lot of deals in nuclear energy, and goes back into NVIDIA, which just pushes the multiple up on NVIDIA. So maybe that money being spread out, keeping NVIDIA kind of more tame, actually isn't the worst thing in the world for the broader markets, but it also doesn't signal that if Oak Gloves goes to zero, NVIDIA has to go to zero either. And I think that's kind of how this might end up playing out. I can't believe you guys are buying Amcor, dude. You guys are freaking crazy. See, but this is what happens in a bull market. Someone mentions a ticker and everyone's like, oh, wow, yeah, I'm just going to, get into that ticker. I will say, I will never introduce a ticker that I don't introduce first before I buy. And I've been pretty consistent about that for a very long time. So if I ever do buy a name, I will lay out that, even if it requires me buying it at a higher price, just because I like the idea of like putting it out there first and then buying it. And so, if I think Amcor is going to 50, whether it be 30 or 31 is like, whatever. It's not that big of a deal. But congrats, you guys are making my entry a lot more expensive now. You did say it's undervalued. I do think it's undervalued. I didn't know that was enough to get everyone to be like, oh, well, let's go ahead and pick up some of that undervaluation. But I guess so. So anyway, yeah, what do we think? Is that 52% of you say yes, it signals toppiness. 52% say yes, it signals toppiness. Okay, so here's the next question. For the 52% that say it signals toppiness, it's another simple question, right? Are you selling because of the meme ETF? When I mean selling, I mean, are you taking substantial profits? Because if it's a top, that means you got to get the hell out, right? You got to get the hell out because everything goes down when it's a top. after we have officially topped. And I don't know. I don't know if you can easily say that. I really don't. It's hard to make that argument. By the way, the meme stock ETF about 3.3% on the day. I don't think we have the updated AUM on that. That'll probably update tomorrow. But we'll take a look and see what happens there. BMNR, by the way, 60 after hours. That's up 1.3%. Taking out my initial investment. Nope, not selling. We have another 2 months of this. Dude, see, with the majority of people also thinking, and it's not just you guys, but like on Twitter, right? Like just reading through all the people that are saying it's toppiness. What if 2026 rips off everyone's face just like 2025? Yeah, 86% of you said no. You're not selling because the meme. I mean, like, what if that happens? What if 2026? What if 2026? What if there's so many doubters of what's going on right now that it's enough of a wall of worry to continue to keep 2026 holding on? Not crazy to imagine that happening. If that is, then it's going to be tough to be on the sidelines. Triple V probably needs to file a 13D with Amcor already. Goodness gracious, bro. Yeah, Palantir, Rocket Lab, and Hood weren't included in the meme stock ETF. So is that a win for those companies? They were referred to as meme stocks for so long. Look, out of this list, I mean, dude, Iren, I don't think is a meme stock. I don't know, ASTS, I don't think is a meme stock. BMNR, I don't think is HIMS. I don't think, like, so a lot of these names they pick, they just, I think it's not really meme. I think they meant to say just like retail excitement, but they're associating retail excitement with meme. Also, meme is good branding, right? Because it gets people interested. But I don't think that necessarily has to be rooted in meme-ish. That's what we got right there. Amit, are you buying the meme ETF? I am not. As a hedge though, going into 2026, I'm thinking about what to buy puts on, because I personally want to have some hedge in 2026, and I hope the hedge goes to zero, which is the point of the hedge. But I would like to have something in case we get a little bit of a downturn, which, look, every year since 1950, we've had 10% drawdown in the stock market, which goes back to the other argument for why the bears might not necessarily be correct about, everything has to collapse. We already had a 30% drawdown in April. It happened, and it was aggressive. And so it's like the idea that it has to happen again for whatever reason you think it has to happen for might not be the easiest argument to make. However, this gets us into the concept of how the consumer is doing. So we have some new stats on U.S. consumer borrowing. Consumer credit rose by only $363 million in August, the slowest pace in 6 months, and far below expectations of a $14 billion increase in the month of August. So let me say that again. In July, you had $18 billion of credit in consumer credit in terms of revolving balances. In July, or in August, you had $363 million. The expectation was $14 billion after an $18 billion rise in July. You ended up getting 1/14 of that. The slowdown was driven by a negative $6 billion drop in revolving credit. Non-revolving credit, which includes auto and student loans, rose $6.3 billion. Meanwhile, the average interest rate on credit cards rose to 22.8%, the highest this year and nearly the highest on record, probably also to, borrow, because they have to pay almost 23% to borrow that capital. So what does this mean? I think it means two things. Number one, obviously it shows that credit rates are getting high enough to show or to at least signal that the consumer might not be as comfortable with borrowing money. And, the American consumer is very comfortable with borrowing money. So the fact that rates are getting this high, A, means we likely need more rate cuts, but also B, means that people are somewhat realizing it's getting a bit aggressive. B, it could also theoretically be signaling a recession. And from that perspective, it's just like, hey, when credit goes down, demand should go down. When demand goes down, earnings go down. People stop shopping. They stop buying things on credit. Maybe the holiday season coming up and people don't take out enough credit because they just don't know if they can afford to pay the 23% they need to pay to buy these Christmas presents. All these different things that happen towards the end of the year. We already looked at a lot of stats this morning about auto delinquencies and credit card delinquencies. Some people might be so delinquent on certain things, they might not be able to even get more credit because they're already missing a ton of different payments. So it once again goes to the point that Main Street, and at least the bottom 10% of Main Street, are struggling. And is that enough of a bear case? Yes, if the stock market collapses, because the majority of the spending of the entire, or 33% of the spending of the entire economy is by the upper 10%. And that's because asset prices continue to go higher. And, as you acquire more assets, you're able to borrow against those assets, and then you're able to spend more money. If that dynamic flips, then we're going to have some issues. And we're not going to sure exactly, I guess we're not going to know exactly when it flips, but if it does, you're definitely going to see an impact on earnings, which hopefully doesn't play out in Q4 and Q3. Robinhood's co-founders have joined the ranks of the world's richest after their trading firm mounted a comeback as unpredictable as markets opened up to millions of everyday investors. Yeah, Vlad now has a $6 billion net worth, which is kind of crazy. I think it's like 5.8 billion. Maybe today, because I mean, every dollar goes up, he makes like another 50 million because he has 50 million shares. So, yeah, but it's a lot of these guys, right? Jensen, Elon. I mean, every dollar on these shares, these guys make so much money. And again, it's the same with us. Maybe you don't have 50 million shares of Hood, but you got 1,000 shares of Hood. It goes up $4 in a day. You have 4,000 more dollars, and like as a result, you're able to utilize that capital in a lot of different ways. So that is, I think, what's really sustaining the bulk of this bull market. The fact that equities are actually going higher because there's good earnings, there's macro tailwinds, there's lower rates, there's obviously this whole AI CapEx narrative. And as long as that continues, even with issues we're seeing on a consumer credit side or a consumer auto delinquency side, that might not be what ends the broader market. And by the way, Microsoft, which has struggled in the past couple of weeks, now making its way back to 530. Dan Ives thinks it's going to 5 trillion.
Look at Azure and where they are in AI. I mean, that's why I believe Microsoft, is trending toward a $5 trillion market cap. But that's the one to me this quarter that sticks out front and center. And look, and that's bullish for just use cases, what we're seeing across the board as Nadella is sort of leading the charge.
$5 trillion market cap. So I'm actually kind of surprised that of all the names that are out there, Microsoft is the one that you've chosen. Sure, the stocks performed quite well, but it hasn't performed the best of the group. Why?
I think Street is underestimating what this demand looks like. I mean, look, I could say, 6 months ago it was Alphabet, right? And that sort of, I think, caught up a bit, even though we continue to be very bullish in that. But I think it really just comes down to like what we're seeing in the field from all the partners, from these cloud accelerations. Street is underestimating the hyperscaler demand, and that goes for Google, that goes for Amazon, goes for Microsoft. And I think that when I look at next year, I think ultimately underestimating numbers across the board for tech by 15-20% and underestimating CapEx by probably 30%. That is why we feel it's a get the popcorn out moment for tech stocks.
But you don't feel like you're overestimating anything. And I know you talk about these, the popcorn moment. I think some people fear that people are eating too much cotton candy, right?
Yeah.
This big sugar high. You heard more of that. It was Ken Griffin talk about a sugar high this week. Do you, as an analyst, do you think you're going to be able to identify when things look like they actually have gone too far?
Yeah, look, that's my job, right? I mean, that's why, I travel around the world talking to customers, talking to more customers later today. It's trying to understand what the demand curve looks like, what the use cases look like. Even on software, names like MongoDB, Snowflake, of course, Massive AI, Palantir, and others. But that's what we're focused on. And as we continue to still see it accelerate and the demand plays out, to me, that's why we stay pound the table sort of bullish going into year end. We've talked about NASDAQ 24 to 25,000, and that continues to sort of be our view. Still 2 to 3 years left in this tech bull market where we are in this AI cycle.
And you don't look at any of these circular deals, so to speak, and raise an eyebrow in any way, wondering whether it all really is going to lead to the promised land?
Look, it's a great question. I get some of the concerns out there, especially some of those like myself that covered tech stocks back in the 90s. The difference here is that it's the use cases and ultimately the build out. That's the validation moment. And when you look at some of these deals, I think it's just laying the foundation for the fourth industrial revolution. But when you look at OpenAI, for every dollar they put in NVIDIA, in AMD, they're going to get $12, $15, $17 in revenue. And I think that's why I'm not concerned about it, because you're building really the foundation for enterprise and consumers over the coming, decade. And that's why overall in tech, as it goes into the second, third, fourth derivative across chips, software, autonomous, the grid, right? I mean, names like Akko, G, Vernova, and others, Nemesis. I think that speaks to our view. The ripple effect's going to be massive here in tech.
I may have said this to you. I said it the other day, and I can't remember if it was directly to you. Apple feels like the afterthought in all this again. I mean, the stock has had actually a really nice move. No one's really talking about it much, but it's on the precipice of a new closing high, right?
Yeah.
The first, in fact, since December of 2024. What happens from here and why?
I think it's going to be a massive outperformer, Apple. I mean, that's why we've stayed with it despite obviously them not being on the outside looking in when it comes to AI. It's for two reasons. One, it's that Google Gemini partnership. I think that's going to be the game changer for Apple. That's going to get them into the AI game. And that's very significant in terms of the biggest install base in the world. The two is that, look, numbers are going to move up. Because look what's happened in China from all of our checks. We'll be in Asia next week. I mean, it's trending, 5-10% above expectations. That's not factored in. And it goes back to like the last few months, right? I mean, the street's been extremely bearish on it. You're starting to see a little more positive. I continue to think New York City cab drivers bearish on Apple. That's a good thing relative to what I think is a stock just starting this next phase of acceleration.
Now, again, for that to materialize, obviously, Apple's going to have to integrate Siri in a more meaningful way across the entire ecosystem. You did have Dan Ives that said Nemesis. He meant to say Nebius. I can relate with saying some of these names wrong. But, I mean, look, at the end of the day, I think these arguments, as long as there is an ROI on all the spend, make a lot of sense. And, that's still a mystery. We could all be wrong about all this experimentation on the greatest industrial revolution from a build-out perspective on AI, not resulting in anything material. It's just hard to be on that side of the aisle when this is playing out. 2021 was definitely a bubble, right? And I also got caught up in the bubble. Everyone got caught up. I mean, I think most people probably got caught up in the bubble. And if you didn't, congrats, but it's really hard to not be in that. And for me, that was buying Palantir at 27 and then it goes to 6, right? That was kind of my experience with it. The one thing I called BS on, and it didn't really matter because I didn't have a brand, so no one was listening to me. No one cared about what my opinion. But the one thing internally that I fundamentally felt was absolute garbage was Web 3.0. That to me was like not a thing. Do you guys remember decentralized autonomous organizations, DAOs, and all this Web3 crypto decentralized? They were going to rebuild Facebook and Google in a decentralized, all of that shit. I personally was just like, this has got to be absolutely garbage, and none of it. Because from my perspective, I was just like, wait a second. You're telling me we're going to decentralize YouTube? That was the argument in 2020, 2021 with all these and Andreessen Horowitz put $15 billion into all these stupid. Remember NFTs, right? That's another part of that layer. OpenSea, all these companies, all the VCs were funding it because the idea was you're going to rebuild the entire internet in a decentralized manner, and everyone's going to own a piece of YouTube because you're going to own the new YouTube coin, which to me just sounds like owning Google stock. And I was just so confused back then. And, YouTube's not going to have a centralized server that controls how all the all the videos get uploaded so that there's no censorship in terms of user-generated content. It's all going to be controlled by these decentralized autonomous organizations, DAOs, that are going to be controlled through these, do you guys remember Ken Griffin bought the American Constitution for $42 million or something? What was it? He bought it for, and there was 43.2 million. Ken Griffin acquired one of the first edition printings in 2021. And I think 35 million was raised through a Constitution DAO. You guys remember this shit? Where they tried to outbid the owner of Citadel to buy this thing. And they used some crypto app at the time to raise all the money to try to outbid. That's the madness that was happening in 2021. I don't think that's what's happening right now. I don't think that's what's happening right. And the reason I don't think that's happening right now is because when you think of AI, I think AI is actually not rebuilding the internet, but making the internet just more efficient, more productive. with large language models. I think that is one of the core differentiations from Web 3.0. Now, in terms of the crypto arguments, I don't think that's stablecoins and I don't think that's tokenizations. If you really remember Web 3.0, and Li Jin was one of the ladies who, to me, was one of the biggest, just quite frankly, I think she was one of the biggest bubble indicators at the time around Web 3.0. She started a venture capital fund called Variant, and her entire thesis was, as you can see right here, it's still up, investing in an internet that turns users into owners. That was the argument back in 2021, that users of these tech platforms should own the platforms themselves. That was kind of the promise of Web 3.0. Chris Dixon wrote a book called Read, Write, Own or something. I think his entire thesis made no sense either. Like, that was the mainstream narrative, at least in the tech world. Right now, the idea that you could tokenize equities or that you can tokenize real estate is a real use case. Someone in Nigeria that doesn't have a Robinhood or an Interactive Brokers that can't buy Palantir stock but has a crypto native platform, because the rules and regulations are fundamentally differentiated when you have stablecoins and tokenized platforms because they actually are decentralized, and that can get exposure to Palantir stock via a Palantir token, is way more of a use case than someone owning a decentralized version of Facebook or a decentralized version of Twitter. Farcaster, you guys remember that? I think that's still around. That's the like decentralized Twitter. None of it made sense to me. None of it made sense because you need governance when you're operating a decentralized autonomous organization, aka what are the rules for this decentralized Twitter? And there's a lot of free speech issues that come into that place. So who comes up with these rules? Oh, well, it's in like a Discord for a DAO. It's like, okay, that's the dumbest thing. Like, I'd rather have a board of directors, and that's not perfect either, but at least that's way better than some Discord that's going to come up with the rules for this. And then number two, if you really want to be an owner of YouTube, buy Google stock. Right? Like, it's so the reason I'm even going on this tangent is because 2021's super revolutionary crypto technology bull case to me was absolute garbage. And I personally did not believe in it at all. 2025's promise is large language models and stablecoins, which is when you kind of put both of them together, or you look at the use cases, both of them makes a lot more sense. Like a lot more sense. Now, some things in AI probably don't make sense. And I'm sure there's plenty of things that in crypto in 2025 don't make sense. Like there's obviously this whole meme coin nonsense, like all that. Like I've never bought into meme coins. I don't think they're like a legit thing, but stable coins are real. Tokenizing equities, tokenizing hardcore assets are real. Wall Street embracing that is real. Wall Street also never embraced Web 3.0. The VCs did. The VCs lost a lot of money doing that, but Wall Street didn't. All that to say, I think there's a difference between 2021 and 2024 and 2025 in the promise of the technology that is being pitched to investors. And I think as long as there is an ROI on that technology, then hopefully that ends up being better than what we saw in 2021. Does anyone kind of remember that stuff? I see a decent amount of people saying they remember DAOs in 2020. Like I thought I was going crazy thinking DAOs were nonsense. But, I feel like it was back then. Tech bro libertarians love turning into co-op loving anarchists. 100%. I don't think it's the same. I don't remember the promise of DAOs and a new internet was a bit different than the promise of tokenization. I mean, let's just look, this is from the Wall Street Journal. This was back in 2021. This is essentially the promise that was back there during 2021. And I think 2025 is a bit differentiated.
Web3 is the newest buzzword taking over the tech and venture capital world. And if you found yourself wondering what it means, you're not alone. Web3 is seen as the third generation of the internet, a decentralized online ecosystem based on the blockchain.
Web3 represents kind of a new philosophy about how to realize these technologies in a more distributed and democratic way.
Venture capitalists have invested billions into this vision, but some tech experts are unconvinced that Web3 could scale globally. Skeptics like Tesla CEO Elon Musk have called it a marketing buzzword.
A lot of the skepticism of
Elon's not saying AI is a buzzword. He doesn't think OpenAI has the money to do anything they're doing, but he's not saying AI is fake.
About Web 3.0 comes from the fact that it's early, expressions are fairly primitive.
As experts debate whether or not this new version of the web can become a reality, here are some of the underlying principles behind the vision for Web 3.0. To better understand Web 3.0 and what sets it apart from the web we use today, you have to go back to the early days of the internet, what experts now refer to as Web 1.0. Most of the participants were content consumers who were limited to navigating through individual static web pages.
Web 1.0, for those who remember, was just, raw HTML and lots of very simple web pages, and it wasn't really controlled by anybody.
This was a more decentralized version of the web, meaning anyone who knew how to code could build on it from their own computers. But at this time, only a small number of users had the technical skills to create and publish content. Then came Web 2.0, which is the stage of the internet we're living through now. Web technologies like JavaScript and HTML5 made the internet more interactive, allowing startups to build platforms like Facebook, Google, Amazon, and many others. For the first time, anyone could publish content online, even if they couldn't code.
Web 2.0 is this modern, centralized version of the web. We're all sharing things on social media, which are owned by, only 2 or 3 companies, and we're all using Google search.
These companies own and manage the data collected from their users, and they frequently track and save this data and use it for targeted ads.
What's at the core of their business model is data.
Olga Mack is a blockchain lecturer at UC Berkeley and is optimistic about Web3's potential to reshape the internet.
The data economy, where the user-generated content, whether it's a conversation or a video, that is exchanged for services. And so there is a perception that this monopoly of data could be abused.
Here's where the vision...
So obviously that did not play out, right? It just didn't play out like that. The entire argument was, hey, the user-generated content that all of us as users are creating on the internet are owned by a handful of companies, which is correct. Amazon, Facebook, Google, right? But the vision in 2021 was we need to use crypto blockchains to decentralize how the entire internet is created. And I never believed in that, because for a simple thesis, like, it's not easy to get on some decentralized platform. This is why Robinhood bringing tokenization, Coinbase bringing tokenization to the masses is so important. On Robinhood, it should be as simple as swiping up and boom, you bought the tokenized version of a stock. All these other platforms in 2021, like, no one was going to use decentralized YouTube because that's not a friendly experience for users, or decentralized Facebook. Like, the network effects, in my opinion, weren't even legitimate. And so from that perspective, the only reason I even went on this tangent is because when we're talking about bubbles, in 2021, that was the core technological revolution that was pitched. And even Zuckerberg, dude, the amount of interviews that Zuckerberg did, he did an interview with Gary Vee on the promise of NFTs and decentralized internet and all this stuff, because a lot of people thought Facebook was going to fail, because if we're going to decentralize the internet, Facebook's not going to have a monopoly on all of our data. But obviously people continue to use Facebook and Instagram and WhatsApp because it's just easier to use those products. So the point is, the promise of technology via crypto and AI in 2025 to me feels fundamentally different than in 2021. And although there is some decentralization that's out there, I think the use case of decentralization is real in 2025, especially in the financial space. But like the decentralized smart contracts to buy an NFT, smart contracts are legit technology and it will matter in the future. But will it matter to buy a picture of a rock? No. And that's the difference between 2021 and 2025. Which is why I think there is some, value to the technology that exists right now. It's just a question of how you build network effects, and to build network effects, you kind of have to have centralized platforms. You're giving me PTSD. Okay, so a lot of you guys remember it back then, bro. It was not a fun time, because it was every new day a crypto startup was getting funded to such an extent that, like, it almost didn't make any sense. This is the sort of final part of that video.
For Web 3.0 comes in. The term Web 3 was first coined by one of the creators of the Ethereum blockchain, Gavin Wood. In a 2014 blog post, Wood envisioned Web 3 as an open and decentralized version of the internet. Theoretically, users would be able to exchange money and information on the web without the need for a middleman, like a bank or a tech company. In this vision for a Web3 world, people would have more control over their data and be able to sell it if they choose. And it would all be operated on a decentralized distributed ledger technology. The most common version of this is known as the blockchain, while still
Yeah, so again, like that didn't happen, and it might happen in the case of finance, but it's definitely not happening on the actual platforms that have billions of users. Because yeah, who the hell would maintain the system? Well, it would be distributed servers controlling the 500 hours of video uploaded per minute to YouTube and this new decentralized YouTube. Like, it never made sense. But that shit was getting funded to the tunes of OpenSea was valued at freaking $13 billion, bro. 13 billion for buying pictures of rocks. I'm not saying every AI startup is cheap right now, but I mean, at least you have AI startups that have some promise, whereas this thing was like nothing. So I just think things are a little bit. Yeah, Clubhouse, bro. Clubhouse got a $4 billion valuation. And I'm sure there's going to be some AI clubhouses that are out there that obviously look super overvalued. But the point is, I do think there is a bigger promise of technology. We got a new politician buying some stuff. Byron Donalds bought 30,000 of IDXX. What the hell is IDXX? What is this thing? Biotech? This dude's buying biotech? Earlier this year, the National Biotech Initiative Act was introduced to boost biotech funding research for products across the country. The act still hasn't been moved since being introduced. This stock was included in his portfolio today. That was disclosed. IDXX. Does anyone know this? IDXX. How much is this up year to date? XBI is the biotech ETF. Oh, wow. This thing's up 54% year to date. Market cap on this is 50. Okay, so this is not a small cap. XBI year to date is now up 15%. A lot of that move happening over the past couple of weeks. This and KRE, regional banks, have been pretty flat, but they are two of the biggest components of IWM, biotechs and regional banks. So that's getting a little bit of love also. Huh. IBXX or IDXX. Oh, they just put out the results today. Were they up today? Oh, no, they're saying they're putting out the results November 3rd. Okay, so they're just announcing they're putting out the results. All right, so you got that happening for some of the politicians. I think our boy Cleo Fields has not bought anything yet. He does have Open Door and Iran. Oh, we got another one. Representative April Delaney bought 30,000 of STERIS. STE makes sterilization and surgical products for the U.S. healthcare system. STE. First of all, who is this lady? $242. It's a subsidiary, works with NASA on spacecraft sterilization. Delaney sits on the House Science and Space Committee, and it's a subsidiary, or the subsidiary of STERIS, works with NASA on spacecraft sterilization. She is the representative of Maryland. She's the representative of Maryland. Okay. There you go. The meme ETF ripping after hours. 12% after hours. Who the hell is buying this thing after hours? Is that like a fluke? Sometimes it just randomly goes up. No, on the mobile app, it's also, yeah, I don't know, 14% now after hours, 11:22. I don't know, I guess someone's buying it. Volume was 1 million today. It looks like some of that volume's coming after hours. I don't know. I don't know who's buying it, but someone's buying it. Yeah, I don't know. It might not be a lot of volume either. It might just be randomly coming in. Yes, John Turnus is rumored to be the next Apple CEO. He's part of the Apple ecosystem right now. He is the senior VP of hardware and engineering. Bloomberg was reporting yesterday that he is next up to be the CEO. Now, no one knows when Tim Cook's going to step down, but this could be your next guy. This could be your next guy. The stock that she bought, by the way, STE, that stock year to date is up 20%. So you do have a bit of move right there from that politician. I'm not selling till Fartcoin hits all-time highs. Dude, I'm with you. I am with you. I agree. All right, that's what we got. Guys, I can't call Steve. He's a bit busy today. He was on, was he on Monday? Yeah, he was on Monday. But he'll be on Friday, and I'll be back Friday if we can't make it tomorrow. He might make another video today. I mean, he's posting videos every day. He's becoming a YouTuber. So, yeah. But he's also, no, today he's supposed to go live with Tanner. I think he's going to do a live stream with Tanner. So, you might see, yeah, he's too famous for me. Yeah, he's changed, bro. My Fartcoin was down. It was flat today. It's down 17% over the past month. But yeah, he might go live with Tanner tonight. I think Chris is sleeping, bro. I don't think Chris is awake. Chris usually sleeps right now. But Chris will be on tomorrow. Oh shit, we can't do tomorrow because I won't be. All right, I'll see how I feel after the root canal. I think I should be okay, but if not, then we'll do our macro Thursday on Friday. I think Chris should still be free on Friday. Intel's up almost 50% in a month. Yup. DJT kind of nailed that one. Did not follow into that. But that one also worked out. By the way, Jensen threw, I mean, he didn't throw I mean, you guys can be the judge on if you think he threw shots or not. But for those that don't know the history between Intel and Nvidia, Intel hated Nvidia to fail so badly over the past 30 years. And he talked about it yesterday about how, like, you know, now things are way different.
I knew Andy Grove and a person on the board who suggested that they do a deal, make a deal with a company that sounded a lot like you during the period when I know you were speaking to Andy. And Andy was quite disrespectful, but that was his way. He just was his way. It's not the way, it's the way that he had himself, set himself up, frankly.
Intel dedicated 33 years of our lives trying to kill us.
Right. And then a man whom I heard you make a test.
That was actually a mission.
But that's absolutely true. I mean, from my point of view, from the board member who said, listen, we have to destroy these guys. However,
not dead yet.
A new company, a new man, Lip Bhutan, comes in. I heard you give a testimonial to him in the 2022 Noise Awards that was gracious, and it made me think, wow, there could be not only just a détente, but maybe one day they'll be talking to each other. This is an important deal for you, isn't it?
You know, we're lovers, not fighters. And it is true. It's true that it is, if you have an imagination about the future, it is possible to bring other people along. And I always like it. I always like it when we give a keynote, everybody's stock price goes up. When somebody else gives a keynote, our stock price goes down. Yes. And so
yeah, he's so right about that. Like when Jensen announces something, everyone benefits. When someone else announces something, Nvidia fall. Like it would literally happen with OpenAI and AMD yesterday. So I mean, it's quite incredible. But as you can see, Jensen's just like, look, we try to help everybody. They still want to hurt us, but we really do want to bring everyone on this journey together.
It says that the way we see the world, the way we see the future is inclusive for other people, and we create opportunities that brings other people along. Our partnership with Intel is because I can imagine a future for the both of us where we could both win and not one of us have to win, the other one to lose. And this partnership brings them into our ecosystem, and so they're going to build a custom microprocessor for us. We're going to also build a custom microprocessor for a new market. And so there are two new products that comes along from this partnership. And also, you know, we invested $5 billion in them, which is no small amount. Now I'm an Intel shareholder.
Why not? I mean, you're a big shareholder
and ever since I invested, it went up something like 50% or something.
Well, I mean, we don't have an open AI valuation, but I think that there were a lot of people who question that they were trying to figure out whether there's some sort of circular nonsense, but obviously clearly from events not. But what bothered me is that people don't realize how good an investor you are. I actually have a friend who made a pitch in front of you, and they didn't expect to see you. They expected to see minions, but you were there and you grilled them for 3 hours of questions. You make these investments, don't you?
Well, you know, it's for us, we make good investments. And the reason for that is because, well, first of all, we're smart. But the reason why we invest is because we imagine building something together. And so when we wanted to create a new type of cloud, we invested in a small company called CoreWeave, and then we helped them build themselves into a company, and they went public, and we made a fortune, and that was fantastic. It was great for them. It was great for us. Now we're going to invest in OpenAI, potentially invest in OpenAI. It's a great privilege, and I'm very grateful that they invited us to invest. But the partnership of OpenAI is really, it's incremental to all of the work that we are doing with Azure and OCI and CoreWeave. And so we're going to build up a whole bunch of capacity for computing for them because AI needs a lot of compute. This is a partnership that for the first time, OpenAI is going to buy directly from us. Usually a cloud service provider buys from us and they rent from a cloud service provider. And so now it's going to be a direct partnership. We're going to help them build an AI infrastructure that they operate themselves and really set them up for 5 years out when they're going to operate their own cloud anyhow. And so this is going to.
So there you go. You got Jensen over the past couple of days kind of highlighting ultimately what is going on in the world of creative financing for these AI deals. And, I mean, at the end of the day, you either believe them or you don't. And if you believe them, then you think it's not a bubble. You believe that there will be an ROI. You believe that the debt markets are being tapped strategically versus what is happening or what could have happened back in 1999. One stat that I heard today as well is that, when Pets.com and all those companies went public, by the way, for those that want the X deep dive audio today, I'll put it right here in the chat. You can listen to it on Twitter. That was at the tail end of the dot-com bubble. That was February 2000, right? In 1999, October to March of 2000 is kind of when the shit really started hitting the fan in terms of the massive massive blow off top and then eventually the decline. And so when that started happening, from 99 to early 2000, that's when a lot of those AI names started going public. I mean, I don't think we're seeing that right now. I think what we're seeing is the early innings of some of the, this is not OpenAI at $4 or $5 trillion valuation. This is OpenAI at $500 billion, which agreed, objectively, that's a crazy valuation, but it's also growing exponentially. And so, the Pets.com was not growing. Pets.com had nothing. There was no growth. It was just pets on the internet, Pets.com. The idea in and of itself was enough to go public, which is insane because at least companies that are going public today have some either sector they're in where there's high demand and they're able to fulfill that demand, or they have actual revenues like a Figma or like a Klarna. And it's just, it's a fundamentally differentiated way for how these companies are approaching the concept of AI. And so the blow off the top 19 that Tudor Jones was talking about, which he also ironically talked about in 2020, from October 99 to March of 2000. The reason I think people keep saying it's 96 is because we're not at that point, and we will eventually be at that point, but we're not at that point where any random company is just going public, raising billions, and the stock market is rewarding it. In this market, if you don't show growth, if CoreWeave has a crappy earnings, that stock's going down. Robinhood, Palantir, they have a crappy earnings, that stock's going down. Even if the stock runs up on a random Tuesday, when it comes time for the earnings, if they don't put up good numbers, those stocks get punished. And for the small selective companies that are not growing, that are getting their stocks being rewarded, again, if those go to zero, do they really matter? Probably not, right? If Robinhood goes to zero or, substantially lower from here, $130 billion company going down, that really matters. That's aggressive. If a company that's worth $7 billion goes to $2 billion, it's yeah, that's nasty for those shareholders, but that does not, I think, affect the broader market. And I think that's also a bit of difference. What about the DATs? Well, again, the DATs, look, I think there are too many DATs, which is why we saw the acquisition of Semler Scientific and Strive coming together. Look, I think the only DAT that matters for Bitcoin is MicroStrategy. All the rest of them, who knows what's going to happen. But MSTR, that Saylor is going to be able to buy more Bitcoin. And I quite frankly think the only DApp that matters for ETH is BitMine. And it's like, people can disagree with kind of which DApps are out there, but the ones that raise the most and that are able to take advantage of the asset classes and the underlying performance of the asset classes is what matters. Now, if ETH and Bitcoin end up getting into a winter, then these DApps are going to zero or very close to zero. I mean, like if ETH falls 50%, like obviously, but for ETH and Bitcoin to fall 50%, which by the way, if you take a look at the inflows over the past couple of days, Bitcoin 2 days in a row, Monday and Tuesday, 1.2 billion in the ETF and then 875 million in the ETF. For these things to go to zero, you would need a broader macroeconomic reason. It's not like a crypto reason, I think, for them to go to zero. Ethereum, by the way, 181 million on Friday, 420 million yesterday. And the problem is it's hard to find a massive macro reason to send these assets to zero when the dollar is not the priority for most investors anymore. Anything else is the priority, which includes crypto and obviously the stock market. And that's why I think, this stuff can continue. And apparently meme stocks. Why is meme up 27% after hours? Dude, who's buying this shit after hours? Like, or is there a stock in the ETF? Why is it at 1334? It just went up another 5%. Is there a stock in this ETF that's exploding after hours or something? Or is it super low volume? That's weird, bro. What's in this ETF again? Is there anything? I don't think any of the tickers in it are making a crazy move. BM&R is flat. Is Open moving after hours? Open Door is down still on the day. Plug, Joby, Oklo. I don't think any of these are moving crazy. No, they're all down after hours. Someone's just buying the ETF for the hell of it. How much is the volume? Hold on. Let me see if I can find the volume. It has to be low volume that's causing this. Yeah, it has to be. Volume after hours looks like 100,000 to me. Is that accurate for some people? Which, hold on. No, it looks less than 100,000. Sorry, I was looking at the wrong number. It looks like it's like 10,000. Yeah, that's not real volume, bro. That's not real volume. 45%. Dude, someone's freaking... Who the hell is bidding this up enough for it to even make a move? Honestly, it could be an error because it launched today. It legit... And look, if someone buys it at $14.48 right now, and then it collapses to $10 tomorrow, you might get some class action lawsuits. If it's found out that this was a mistake for it to even go up like this after hours. What is Webull showing? Let me see if it shows the same price. Webull showing 14. Legend is showing 14.30. Matt said you just sold it. Wait, what price did you buy it at? Did you actually get liquidity at 14.30? So now it's at 14.49. I guess you did get liquidity at 14.30 if you sold it there. 1,500 shares. Oh my goodness, bro. Hold on. I'm going to try to buy $1 of it. Wait, no, I can't. Wait, can I? Buy in dollars. Okay, I'm going to buy $1 of this. No, fractional shares unavailable. Okay, so you have to buy actual shares. Benny said I bought at 11. Benny, do you have it? Can you sell it here or no? Because like there needs to be someone willing to buy it from you at 14.40 if you bought it at 11.30. Which means if you can actually get liquidity on that, maybe it's not an error. Just went from 14.60 to 14. That's 13.87. I don't want to try to sell it. Okay, hold on. I'm gonna buy one share of this shit. I'm buying one at 13.87. Let's see what price it gets filled at. It's not even filling. It won't even fill. There's some wonky shit happening. Yeah, the bid-ask spread is insane. Some of you guys said it's going through. Mine didn't even fill. Usually it fills instantly. Oh, it just got filled. What price did I get? I got 14.14. Okay. Okay, now I'm going to sell it. I'm going to sell it at 14.38. I mean, I'm not doing a limit order, so we'll just see wherever it gets sold, whatever. Let's see if it gets sold. This is ridiculous, bro. This is so dumb. It's probably going to get sold at like 13 or something. This is weird, bro. What the heck is going on with this thing? I don't know. All right, well, this is the shit that we're seeing in this current market. Look, again, am I a fan of this meme stock ETF? No, I'm not like thrilled about it. But do I think that it signals a complete end to this market, just given the tailwinds of EPS growth and rate cuts? No, I also don't think so. A mid-science experiment, yeah, basically. It didn't even sell yet. I don't even know if these orders are going to go through. I think this is just weird behavior after hours more than anything. But it is very low volume, which could be the reason it's happening. All right. Are we done for the day? Are we done? I think that's it. I sold one. Did you buy mine at 14.15? Yeah, I probably bought yours at 14.15. I bought it at 14.14. Now it's at 12.74. Yeah, it's just low volume after hours, dude. It's just, you know, anything that moves 50% after hours is going to get a lot of people to take a look at it. Iman, thanks for the super chat. I just sold 2,000 at 14.54. Good thing I was watching your stream this morning. I bought 5,000 right away at 9.80. Well, there you go. You made 50%. So congrats. Congrats. Wow, you actually got out at 14.54. Someone bought those at 14.54 from you. That's great. The highest I even see on Robin is 14.38. Thank you for the super chat. And this reminds me of, you know, congrats on the profits. This reminds me of BMNR when I mentioned Peter Thiel was getting in and this thing like fell to like 30 and a bunch of you guys just went into it. I should have gone in that day as well. But at the time I didn't really understand the BitMine thesis. And then it just jumped to 40 within like 5 minutes because it's Peter freaking Thiel. So like the market, you know, it took the market a second to understand it, but you know, once people got it, then it went up. Weeble, where's Weeble? Is that moving after hours? 12.71. Again, that was at 11.90, so there was a trade to be made there. All right, cool. That's it. Thank you, everybody, for being here. Again, I know there are certain elements of this market that feel toppy. I am continuing to defend that I think this is a legitimate bull market that's backed by earnings and an easier monetary cycle. Could that go away? Yes, and we're going to follow it up every single day to see what happens with the thesis. Maybe my thesis changes, but as of now, based on the evidence and the data that's coming forth in front of me every day, that is how I'm concluding. And look, if you're really feeling scared about this market again because of the meme stock ETF or whatever, you know, random thing that's scaring you, take some profits. Take some, like if the market's giving you liquidity on Hood at 150 and you think Hood doesn't deserve to be, take some profits. Sell some at the money calls. If you don't like that BMNR is doing what BMNR is doing, then take your profit. Like, you know, it's like the easiest way to resolve a lot of nerves is just to de-risk. Like I sold AppLovin yesterday. I could have made another $500, but I was happy with the $1,000 I made because I'm like, I don't want to take that risk. It is what it is. So I think that is at least one way to kind of have a bit of a hedge or even buy some puts, right? There's plenty of ways to, I think, sleep easier at night without feeling so scared about the potential nature of the market being aggressive or frothy without having to fully exit the market, which I think is important. Are you nervous about the dentist tomorrow? No, I am not worried about the dentist. I think I got a root canal like 2 years ago. So it's a root canal. It is what it is. Like I've got one before. It was fine. I'm just happy I was able to schedule it this week. Because, dude, Sunday, I couldn't even explain what was happening Sunday, bro. I was like, why is this hurting as much as it's hurting? And then I realized, holy crap, I probably need to get this root canal quicker than not. So yeah, I'll be okay. And I think I'll be able to speak in the afternoon. Like I like assume no market close, but the root canal is at 8 a.m. So I think I should be good by 3 o'clock. I mean, I really don't think it should be that much of an issue, but if I don't go live, then I guess we wanted the market close. But we should be all right. AMD 238 after hours. My goodness, bro. This one's not almost 239, dude. Almost 239. There you go. There you know. All right. Good stuff. Thank you, everybody, for being here. Again, I am at my parents' house for those wondering where I am because my building today, like, dude, just a bunch of random things happened over the past couple of days with this root canal and then what happened yesterday night with my building. But they sent an email that says, hey, we're not going to have power for like 7 hours tomorrow. And I'm like, dude, like, what do you mean you're not going to have power, bro? It's like, why am I paying all this rent if you guys don't have power? And they're like, yeah, we use this generator and we're trying to, once and for all get off the generator. And that requires like completely changing our electric grid. So for 5 hours, 7 hours tomorrow, there's gonna be no power. And I'm like, well, I need to do a stream. Like I need the freaking internet. So I just drove here this morning and I was like, got to do it somehow. But yeah, no market open tomorrow. We'll be back Friday. Hopefully market close tomorrow. If not, then we'll be back on Friday. Wait till the fire alarms start going off at 5 a.m. We haven't had that experience yet. But yeah, that was pretty annoying. I was just like, well, I kind of need power to do stuff. So I cannot do the market open from the dentist office. No, that's not the easiest thing to do. What did your parents do with your old room? They turned it into, well, my mom turned it into, moved into a Temu warehouse. They turned it into a library. They like, dude, my mom said she was gonna leave my room like unchanged. She freaking took like the bookshelves that were in the living room. No, she didn't. I came back a month ago just to visit, and I did it. She made sure that I did everything. And I took all these books and I brought them upstairs, including the shelves. And then she like transformed the living room and like she put up all these different shelves and like all these just like a ton of different shit. And she like completely changed the living room based on moving a ton of shit into my room. So my room's now like a pseudo library with a bed. The bricks are still there. She didn't take out the bricks yet. But downstairs looks a lot different because now she has a lot more space. By the way, my meme stock ETF sold at 1410. So I bought it at 1430. It somehow got sold at I thought it would sell like 1350. It sold at 1410. So we lost like 10 cents on it. But it's at 1420 after hours. People are buying it. She was waiting. She was definitely waiting, bro. She was acting like she wasn't waiting, bro. She was definitely waiting. Did they rent your room already? Oh my gosh. She wanted to keep it as you left, so it makes sense to make you do it. Exactly. Exactly. Do you know how to pronounce Nokia? No, I still think it's Nokia. I don't care what you guys say. I still think it's Nokia, not Nokia. Genuinely, I'm going to look up some videos of the old Nokia CEOs and see how they say it, just to try to confirm how I think it's supposed to be said. The website for the option stuff is optioncharts.io. Optioncharts.io. I'm not sponsored by them or anything. I just found them a couple months ago, and they're a really good website to track options activity. So optioncharts.io. See all the stocks that are traded every day. Sorry, Amit, for your loss for 10 cents. I appreciate it. I appreciate it. All right, I think we're done. I'll be out. We'll come back on Friday, most likely. And yeah, that's it. That is it. I really tried to not do it during a live show, bro. Which was kind of stupid because like it's a tooth infection. Like the thing about your teeth, bro. Your teeth connected to your brain, your nervous system, your ability to breathe. Like your teeth, you kind of don't mess around with your teeth. Some shit spreads in your teeth, you could have some real big issues. And I was just like, oh, I can delay it for a month without being like, wait a second. That's not a smart idea. So I am happy that we're getting this done with tomorrow. And we'll be back on Friday. Did your mom get a permit and a demolition crew for all the bricks? No, not yet. Not yet. Jason, you got to stop saying this thing, bro. I love you. Thank you for the super chats, but you have to stop saying this thing. I'm not the modern version of Warren Buffett in the making is exactly what the modern version of Warren Buffett in the making would say. Oh, dude, Warren Buffett has a lifetime of performance. I don't even have my own fund, bro. I don't think you can really compete with the Buffetts and Druckenmillers until you launch a fund and you're publicly audited every year and your performance is tracked. Like until you get to that level, I don't think you can get into the conversation of being there. So who knows? Maybe one day, but even that day, I think is very far away. But it is someone I look up to. It is someone I look up to, and Druckenmiller always. By the way, 13Fs and 13Gs. I think early November is when we're getting them. And I was thinking about it today. I'm actually really excited about it because, dude, Grab got 1 billion shares of volume in September. Like I think some big money started buying it. Rocket Lab, like all these moves that I think there's some big money that really came in. So the 13Fs are going to be really important in November, which is only a month away. And we're going to see kind of how these names kind of loaded up. And we'll try to figure out what's happening. But that's going to be one of the more important. Wow, the meme stock thing is up. Like, who the hell is buying it, bro? It'll be important to see what those 13Gs look like. 1680? I should have freaking held the stupid share, bro. Goodness gracious. Volume now. No, that has to be another. Yeah, 26,000 shares. It was 10,000, so 36,000 after hours. I mean, look, 36,000 shares is not a lot of volume, but regardless, it's wild, bro. That is absolutely wild. Anyway, that's what we got going on. Again, if you feel a little bit of uneasiness in the market, remember earnings growth is what matters. In 2 weeks, we're going to see what happens with earnings. Again, we have some earnings tomorrow. We'll see if I'm on the market close to cover them. Then this week, we're the 13th to the 17th. We get a bunch of banks, TSM. After that, we get Tesla, Netflix. And then after that, starting the 27th or the 28th, we're going to get Google, Reddit, Snapchat, Microsoft, Meta, Coinbase, all those names that matter. And so, yeah, in the next few weeks, we're going to see what these earnings look like. And if the earnings are good, I think the market continues. If the earnings are bad, we don't. I don't think we're at the point where, given the market and how it's trading, can tolerate bad earnings. But if we get good earnings, I think we should be all right. All right, that's it for me. Thank you, everybody. Appreciate it. I will not be here on the market open tomorrow. Hopefully the market close. If not, then we'll be back on Friday. And again, I deeply, deeply appreciate everyone coming every single day. Congrats to everybody. Rocket Lab and ASTS, big stuff. AMD, big move today. It's just been a hell of a week for a lot of people. And now we just got to see if the momentum can hopefully continue towards the end of the year. And if we can, then I think it'll be a good year for most people. He's using his I'm leaving for real voice now. Do I have an I'm leaving for real voice and I'm leaving for fake voice? You guys are wild, bro. You guys are wild. All right. Love you all. Thank you, everybody. I'll see you guys hopefully tomorrow. If not, on Friday. Bye, everybody. Have a good one.